Ladies and gentlemen, and welcome back to the channel. We have some brand new updates on the Momentum Finance project. This is a project that I've enjoyed quite a bit so far. This project was really one of my primary cornerstone investments in my 3-year crypto retirement challenge. If you're familiar with that challenge, I have an entire strategy where I'm trying to invest $5,000 and grow that to $50,000 per year in passive income. Well, the entire process behind that strategy is to be able to invest in high-risk projects, earn quick, fast, high returns, and be able to deploy those high returns into more stable, real yield cryptocurrency projects. Well, Momentum Finance was the high-risk project that I was currently focusing on, and they've recently come out with some brand new updates. They're only about a month and I think 1 month and 20 days old. They've come out with some brand new updates as of yesterday. Everybody in the community is excited about this. Telegram is buzzing. They did an AMA yesterday. Now, for me as an investor, I'm going to give you kind of my thoughts, and I'm going to give you a bit more of an objective viewpoint on Momentum. It's easy as investors to get excited, to get hyped up when the community's hyped up. But I think that it's important that we look at, okay, why is this good and how could this be bad? And as investors, we've got to make our decisions based on a little bit of objectivity. I said yesterday in my video, if you saw my video yesterday, I talked about how I was able to predict that the drip price would go down to $1 within 6 months. Inside that video, I talked about how it was important to understand tokenomics of a project and then the market psychology or the psychology of the investors inside the project. Now, when we talk about market psychology, it's important to understand that you cannot get a true, accurate picture of market psychology just by looking at a Telegram or just by looking at comments on YouTube channels, for example. Typically, investors who are active in Telegram are going to be the most positive investors. Plus, some Telegrams are heavily moderated where they'll delete anybody that has questions or they'll call it FUD or whatever. But it's important that when you're investing that you you have to look at what could cause FUD, for example, what could cause uncertainty, what could cause fear, and then you make your decisions from that point with that information in mind. You make your decisions moving forward. And that decision could be say, hey, I know this is the risk, but I'm still optimistic and here's why. Or you can say, hey, I don't necessarily like this new risk, so now I'm going to, take money off the table, so to speak. That is your decision. By the way, nothing in this video is considered financial advice, but I'm going to share with you kind of the positive and the negative that I see with the current updates of Momentum. Now, just to recap, what is Momentum? Well, it says here, a new era in decentralized finance technology. The Momentum project, or the MAS token, is an ecosystem that pays dividends and algorithmically increases in price over time. They've been KYC'd by RugDoc. They've also done some AMAs where they've spoken and they've had their face on camera, and all that's really great, and people get excited about that. That doesn't matter to me. I care more about the tokenomics, and I care about the market psychology, and I also care about, is it truly decentralized? Now, what do we mean when we say something is decentralized? We mean that the dev team cannot change the foundational aspects of the contract. They can't change the ecosystem. I prefer for something to be fully decentralized. 2 recent projects that you can look at. If you look at Drip, for example, even though the Drip project is probably done, even though the price is just tanked drastically, with Drip, the developer has not or could not ever change the contract, and he never did. The way it was launched is the way it's always stayed, and there's no quote-unquote editing the contract or changing the rules in the game. I prefer a decentralized contract, but a lot of things get called decentralized, but they're really more centralized. And so in this case here, Momentum, they're calling it decentralized, but they literally just changed some of the rules. Now, the community and the developers say that they changed the rules for the positive, and that may be true, but you have to accept the fact of, if they change the rules for the positive, they could always change the rules for the negative in the future for quote-unquote sustainability. And that's a problem. I mean, Furio, for example, they were holding their price token with the smart contract. They were holding that price around, I think it was $5, and then it went down to $4, and then almost without warning, they let it go down to $1. Well, that's very difficult to get your funds out if they're going to change the rules of the game on you like that drastically, that quick. So you could end up in a position where you think you're playing with one set of rules and all of a sudden you're playing with a new set of rules, and that's a problem. And I will tell you, I don't like the fact that they changed the rules, even if it ends up being positive for the ecosystem. I personally am not a fan of that. But let's take a look at the actual changes that have taken place. This was a Medium article that came out, and if you scroll down, they've come out with this thing called Singularities. And if you go to the website now, and I don't have it pulled up, maybe I do. Yeah, of course I have the website pulled up. So now you see this tab with Singularities, and the price is continuing to move up for the most part. That's phenomenal. And bonds are over here now. They're basically going to phase out the 14-day bond, and they're going to be decreasing the savings on the mass token bonus by 5% per week until this bond is phased out. And now you're going to be able to come in and get Singularities. And just a couple of differences with bonds. You stake your bonds, or you bond, however you want to call it. You take BUSD and you buy bonds, and you get those bonds unlocked a little bit every day over 14 days until they're fully unlocked. When they're unlocked and you're holding them in your wallet, the way that it worked previously, you just have to hold them in your wallet. Then you're going to earn part of the trading fees on the platform. There's a tax, a 15% tax and a buy tax and a sell tax, 15% and 18% respectively. And when people buy and people sell, that part of that tax comes to you for holding your mass tokens. That's how it's worked up to this point. So you got dividends, plus you got the token price appreciation. With Singularities coming out, they've changed the rules a little bit. And again, everybody says this is really positive, and this is why they say it's positive. They're saying that they're going to create some real long-term sustainability, allowing people to earn real income from real revenue in the project. So the issue is the way they're maintaining the price appreciation is they're using a smart contract that when people bond, it takes that BUSD essentially, and it uses that BUSD to help support the price. Plus, when people buy and people sell, that BUSD, in those taxes, part of that is used to help support the price and help to drive the price up. If you take a look right here and see the price is steady going up, 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 up. You see these small buys here. All of this is coming from what they call I think it's the trade management system, TMM, whatever that stands for. I forget right now, but that's helping support the price and pushing the price up. However, that will work as long as there are funds in the treasury that can allow that to work. And I do want to say, I like the fact that this appears to be programmed in a smart contract. That is a layer of decentralization that is good. It's not like they were manually putting these buys in. I know of another project where they do it manually, and that's not necessarily good. So periodically, the smart contract uses the funds in the treasury to help push the price up. And the issue, though, is as the devs have said, if everybody sells, then sooner or later, the treasury funds would run dry. So what can they do to continue to bring in revenue to support the treasury? Hence the rollout of Singularities. Ultimately, Singularities are going to replace the current 14-day bond. The idea is now you take your mass tokens and you stake them into the platform for 30 days. After 30 days, you can just leave them staked, and that way they're continuing to earn for you, but they get locked up for 30 days. And why would someone want to lock up their momentum tokens? Well, when you lock up your momentum tokens, they show there's 5 different revenue streams that are going to help fund Singularities. Now, it's interesting to note as well is that the team has started shifting the focus away from the momentum token increasing in value algorithmically. It appears that they're saying it's less about the price increase and it's more about the dividends. Now, this could be because the treasury, it's difficult for the treasury to maintain the price increase over time. Okay, fair enough. But let's look at what they're saying that this Singularity is going to earn. It's going to earn trading dividends, which is what we get now with our BUSD bonds. So now you've got those fees are going to ultimately go to Singularities. So my understanding is our mass tokens in our wallet will not continue to earn fees, is my understanding, long term. My understanding is they're phasing those out. And if I'm wrong on that, someone in the community can definitely let me know down in the comments. They're also going to be using trading bots. Presumably, they're going to be making a lot of money with trading bots. They're going to be doing proof of stake mining. They're getting an Avalanche node, which everybody's excited about. I think they're also getting an Ethereum node. And the reason they're excited is because that's a real passive income stream. Plus, there's this whole Paraguay mining farm they're starting down in a Bitcoin mining farm they're starting in Paraguay, and the developers have openly talked about this, and they're going to be doing some proof of work mining, and they're going to be sharing that revenue as well with the Treasury. And the Treasury, of course, those funds are going to be able to go to people who stake their mass tokens into Singularities. Now, if all this pans out, this could be really good. I mean, they are securing a long-term real revenue stream. But the question is, at what risk and what cost? So this is where my objectivity comes in. I, first of all, don't like that I feel like the game's getting changed a little bit. You see, no longer do we keep tokens in our wallet where they're always liquid and we can sell them. Now we have to lock them up for at least 30 days. They're illiquid and we cannot sell them for at least 30 days. Right now, we got trading dividends. So we get these already. These trading dividends, it's the BUSD that we already earn. So we have some idea how much we're going to earn there. But the other four investments it's a little bit uncertain. So trading bots. Okay, we have no idea what trading bot they're looking at using. We have no idea what their track record is with the trading bot. Do they know how to program bots? Do they have a bot of their own? Are they using someone else's bot? What are the costs to use that bot? So these are a lot of questions. Again, this isn't good or bad. It's just questions I have. So how much are we looking to earn? How does this bot do in a bear market? How does it do in a sideways market? How does it do in a bull market? We're not going to actually know because we don't know anything about the trading bot. It's a new thing lately. People can say they're just getting a trading bot. Some of these trading bots do great, some don't. Right now, it's just a big unknown. Now, proof of stake mining, they're getting a validator node. How much are they going to earn? How much revenue is coming in from the validator node? Well, it looks like on Avalanche, it's up to 11%. The calculator says 8.66% per year. It is real revenue, but that's not a very high percentage. They're also getting an Ethereum node. I mean, that's great and all, but I think Ethereum's only paying at like 5 to 8% APY, APR. So, I mean, that's not a lot of revenue either. That's less than AVAX. So it's okay. Proof of work mining in Bitcoin. Well, right now, mining is not exactly profitable in a bear market. Now, they're saying you can go to Paraguay and electricity is really, really cheap. But again, it's not like they're making 50% per year on their proof of work mining. They're probably, I don't really know, but I would assume it's not even 20% APR per year. We're taking these funds that are in the Treasury and we're going to put them to work, and then they're going to pay out. Now, if they pay anything out, arguably it's going to be more than the current trading dividends. But I would argue that most people in momentum at this moment in the game, at this stage, I would argue that most people aren't in momentum for the trading dividends in BUSD right now at this moment. I think the price appreciation is where we're getting our biggest gains for now. You can't forget future investments. The problem with this is really, at this point, for me, this is a fantasy. This is pie in the sky. We have some sort of idea that we're going to put into action, but we don't know what it is yet. I wouldn't even consider this. It looks great. We got 5 revenue streams. Well, future investments, this could be 3, 4, 5, 10. Maybe there's 30 revenue streams coming. But right now, this doesn't count. This is totally pie in the sky. This is going to be a month or two out. And again, we don't know how much it's going to be, but it's probably not going to be a lot APR-wise. Here's what I'm seeing. The major income stream that we know of are the BUSDs we're already getting. The way it stands right now, we have to lock up into a Singularity for 30 days to get the trade dividends we're already getting. In the next 30 days, 8% APR, we're not going to notice that really from validator nodes or from Ethereum nodes. That's not even going to be that noticeable. Trading bots is a wild card. We have to wait and see. I think it's 50-50, and I think it adds a lot more risk to our returns, but I think we're just going to have to wait and see how the Singularity payouts go. But essentially, what I feel like I'm seeing now, so there's 2 things that I'm always mindful of. The tokenomics of a project. Right now, this project is going to continue to go up for now as long as the Treasury can support the price. And to their credit, there's a huge red candle that came up here. I actually was recording a video for our subscribers and giving them, kind of my candid behind the scenes thought on my actual investments and what I'm doing. And during that video, this huge red candle was here. And before the video was done, this red candle shot back up and it was green again, which is good. I mean, overall, that's really, really good. That means the trade management system is actually working. And so we love to see that. Here's my concern. My biggest concern for the project is not that they're not going to have some sort of real revenue coming in. I'm certain they're going to launch some trading bot. Whether it does good, it does bad, I don't know. Hopefully it does good. I'm certain they're going to start proof of stake and proof of work mining. No doubt about it. This team has a track record of building projects. This is the Alpha Shares team, so it's not like this is their first merry-go-round. We already know what the trading dividends are. They're nice. They're fun to get. I've always liked them. I get typically $10 to $20 a day, it seems, just depending on how much trading is going on. That's always a fun revenue stream. I'm wondering, with all the hype that people have right now on Singularities, I think most of the community are overestimating how much they're going to earn staking into Singularities. And if that happens, here's my biggest concern. When we talk about market psychology, I'm afraid 30 days from now, this is the 13th, so by the 12th, the 11th of 12th of January, we could see significant downward pressure. We could see a lot of people dumping because they're upset. Already price appreciation is slowing down, which is expected. They've communicated that the whole time. So that's not as big of a deal. But in fact, if you zoom out, you can see that it's really kind of starting to level off a little bit. But if people think that they should be getting more than what they're getting inside of Singularities, and they're having to lock up their funds for 30 days, I'm concerned that some people, the market psychology, some people may start selling as soon as they can in 30 days. And if they do, I don't know how much funds the Treasury has to be able to defend against those sales if that happens. And so that's what kind of sort of makes me nervous. And I went into more details on what I'm actually doing with my funds and what my thoughts are going forward. And I will tell you, spoiler alert, if you're subscribed to our 3-year crypto retirement challenge, I still didn't give away actual specifics. I did go into some more things that concern me about market psychology that I don't know if everyone's talking about. So I wanted to point that out. I talked about liquidity. I talked about a lot of things that's going on that I think is important to be aware of as an investor. And most people are just promoting how this is super positive, super positive. And by the way, it may be. Like, if there's some sales coming in 30 days, and I do think there's going to be some sales coming in 30 days, and if the TMM can withstand the next 30 to 60 days, if the Treasury can withstand the next 30 to 60 days, and price continues to be stable, then I think this could get interesting. The challenge is, can you take investors that are typically short-term minded, because most investors who launched into momentum, like we've been earning some really good returns. Most people got in with a bit of a short-term, quick return, high profit mentality. All of these, for the most part, I think the trading bot's the wild card. If that goes well the next 30 days, it's going to be awesome. If the trading bot does 3 to 5% a month, that's not a lot. If it does 10%, that's pretty good. That means it's going to really boost these trading dividends at that point. That's going to be pretty good. But it looks like the team is starting to take sort of a longer term approach creating real revenue, and I think that is admirable. That's also good. I just wonder what the actual investors who are currently in this project, what are they going to think? And that's, as an investor, like, you've got to be willing to zig when others are zagging. Sometimes you got to zag when other people are zigging. You cannot be stuck holding the bag because you're optimistic about the future of a project, and then lo and behold, a few people get scared and they dump on you and you're still holding the bag. That's the challenge. Now, one thing that could prevent people potentially from dumping really hard is, keep in mind, there's an 18% tax when you sell. So there's a lot of people, when you sell at 18%, there's a lot of funds here that still aren't in profit unless they got in way back here. So that may inhibit a significant price dump, possibly. I don't know. I mean, I'm just trying to share the negatives, the positives. Ultimately, you're going to have to make your decision on what you do if you're in this project, just like I'm going to have to make my decision on what I'm going to do in this project. But I can tell you, anyone who's looking at this and they're like, oh, this is just all positive, this is all positive, this is all positive. No, this is growing pains. This is transitioning to a much longer term project. And there's nothing about that transition that's ever going to be perfect or risk-free. And as investors, we have to be able to take a balanced approach to our investment, no matter how enthusiastic and excited we are. And that's all I've tried to do in this video. If you've got any comments, please leave them down below. Thank you so much for watching, ladies and gentlemen. If you love objectivity and you appreciate that, then do me a favor, smash that like button. Also, if you want to know more about my 3-year crypto retirement challenge, go down in the description and make certain that you subscribe to that as well. Ladies and gentlemen, decentralized cryptocurrency equals freedom. This is Crypto Wealth. I'm out.